If you paid on the 30th of each month, you're considered paid on time. You've never missed a payment and never been late. Same thing with credit cards. You can pay on the last day of that cycle and you're not late. You have to go 30 plus days late.
Hey everyone, welcome to another episode of The Remote Investor. I'm Michael Albaum, and today I'm joined by my good friend Dan Frio, who talks to us about all the things we need to be doing to maintain and increase our credit scores, since it is such a critical piece of the puzzle when it comes to getting loans. So let's get into it. Dan, good to see you again, man. How are you?
I'm doing awesome, buddy. How you been?
Oh, no complaints. Sun is shining. It's summertime. All is good. I feel like that
it's
there's
nice
that
and
Sublime
cool
song.
here. It went from 95 to like 70. So last night I got home and I had to put a sweatshirt on here in Chicago. I haven't had a sweatshirt on in a long time, but it was welcome.
That's great, man. I love it. I love it.
Cool.
Well, Dan, you, for anyone who doesn't know, you are a mortgage advisor, mortgage broker, investor, YouTuber extraordinaire. But I want to talk specifically about something that you posted a video about a while back. And I want to know. Talk to me like I'm someone that you're consulting.
Yep.
I'm saying, Dan, I got to get my credit score up. I'm looking to get a loan. I'm looking to refinance my loan.
Yep.
What do I do?
Got it. Well, just so you know that title was kind of in vogue back in those days. How to increase your credit score 5,000 points in 30 days or less. So I hate to say it, but it was a little clickbaity. So can you increase your score 100 points within 30 days? Most people, I'll just be blunt, no. Okay. But I can give you a lot of insight. Okay. So
great.
Here, I do this every day. So every day we have people calling in and putting in their applications, and they're like, are you going to pull a hard pull or soft pull? What kind of credit score are you going to pull? You're going to do? And they're freaking out about it. So I want to talk about that a little bit too. But most people, they give me this number. They're like, oh, my credit score. I'll give you one good example. I had a gentleman about 3 weeks ago, and he said, Dan, my credit scores should take a jump up on August 3rd or 4th, something like that, he said. And he knew that it was going to go up to 620 because right now it was pretty bad. So I'm like, okay, let's just wait for next week. So then I go in and pull his credit, and it's got to be probably, and I hope he doesn't watch it, it's probably one of the worst credit reports I've ever seen in my life. It ended up coming in the 400s. Okay, so the first thing, they're upset with me because he's like, it was supposed to be 620. So I finally said, where do you get your credit scores? He's like, well, this system I get every day, every month they send me this free thing and it says it's 593 and this. I said, but what is it? So he sent it to me, and it's one of these systems, and a lot of them are really good. But most of the time when you're getting a free credit score, free credit report, what that report consists of is what's called your Vantage credit score. And a Vantage credit score is a great educational tool, but there's no lenders in the whole country that use that model. They use what's called your FICO score. Okay. So the first piece of advice people need to know is, where do I get my FICO score? Okay. Because your FICO score is what lenders are going to use. Now, a lot of people also don't know this. You probably have 30 or 40 credit scores. Okay. Now, here's where it gets confusing. Most people know there's TransUnion, Equifax, and Experian. Okay. But you don't know the subcategories. So we're going to just say TransUnion, for example. TransUnion has 3 to 4 models underneath it. So there might be a FICO, model 4, model 8, model 9, and a model 7. I'm kind of making those numbers up.
Okay.
And then under each one of those is another subsection. So there's going to be we'll say TransUnion Model 8 has a mortgage score, a credit card score, an insurance score, and one more car score, car mortgage, car loan score. So you can see how there's so many numbers, or there's so many scores you could potentially have for somebody to come to me and say, Dan, I got a 630 credit score. Which one is it? It could be one of 40 different scores. And was it your Vantage score? Was it your FICO score? What is it? So I always promote, people, pull your FICO score, and you need to get the mortgage score. So you can go to My FICO and things like that. I actually created a website for this. It's called creditscoresandmore.com. And you can do all this on there. And that's why I created it right then and there when I created that video, because so many people don't understand how the credit scoring systems work. Now, there are techniques and tricks you can do to really ramp up this. The first thing I always advise people to do is please pull your real credit report. You get a free one every year. Go through it and check for accuracy. I can almost assure you there's going to be things on there you don't know about. There might be a collection. Like I had when I first bought my first house years ago, I submitted my loan and they're like, Dan, you have I think it was a Sears bill. I don't even know if Sears is still around. You have a Sears bill that you owe $20. And I'm like, Sears bill? I haven't shopped in Sears in 20 years. Well, not at that time. So there was a Sears across the street from where I was working at the time. I'm like, okay, I'll just go over there and pay it off. So it was a Sears bill I never knew about. So you might have collections judgments, even a $30 dental bill that you never paid that's on your credit report. So the first thing you really need to do is look at your credit for accuracy. And then there's a whole bunch of other things you can do. Now, what happens is when you use a credit repair company, now I kissed a lot of those frogs and a lot of them didn't turn into a prince. And people spend $300-400 a month. Now I know there's good ones out there, but a lot of people can do a lot of this themselves. So what most of these credit repair companies will do when you go to them for help, they'll send a dispute letter out to every company. And what used to happen in the past, that company had to take that report, their credit rating off of your report for at least 30 days while they rectify it. Well, that rating gets removed, so their credit score automatically just pops up for 30 days, and then they're back down to square one. So many times that didn't work. So that I wouldn't recommend just doing that. But one little technique that people don't know is, getting to be an authorized borrower on a credit card. So let's say your mom, your dad, aunt, uncle, brother, sister, they're doing well. They make good money. They got good credit. You might want to go to them, and this is so you have to really do it with a family member or something like that you're comfortable talking with and saying, Mom, you know what your credit score is? Oh yeah, my credit score is, most people know their credit score. Do you have it? And that. Ask that person to be an authorized borrower on their account. Now, your mom or dad might say, they know you're a derelict and you're not going to, probably pay the bill or anything. So the good news is you can say, Mom, Dad, I don't even want a card. I just want you to be on your account so I can use your rating over time to help boost my credit scores. And as soon as they add you as an authorized user, it's going to report on your report and it's going to give you their whole history. So mom might have had a credit card for 10 years. Now you just picked up a 10-year credit card account that has no late pays. Your credit scores are going to go up. Okay. Those are just little things. Also, one of the last things I'll talk about is when do you pay that account? Okay. So what happens is when you get your statement, that's the same time that creditors send out the information to the credit reports. So let's say you have a Visa card and you spent some money on it. So it's a $900 bill, but it's $900. So they issue you the statement, you get the statement and you pay it off immediately. So you're like, I never carry a balance on my credit card. Well, on the credit report, it doesn't show that because they issued the data the same day they pushed your statement out to you. So on the credit report, it's saying you owe $900, okay, when it should be zero. So if you actually use certain systems, it'll prompt you saying, hey, they're gonna send out your billing on the 3rd. Well, maybe you can make that payment on the 30th of the month before. So now it's a zero balance and your statement's going to read zero and the mortgage, report on the credit report is going to show zero and it'll give you a boost up in your credit scores. So these are just little tricks. And that's why I created creditscoresandmore.com because there's a couple links in there, the companies you can use for like $19 a month. Use them for 3 or 4 months, get where you need to be because it puts all this stuff in your hands and then cancel. Or you might like it enough, you just keep going it. Versus, going out there and hiring a professional credit repair person at $300-400 a month. Shit, if you're in there for 5 months, that's $1,500. You probably could have paid off the creditors that you owed for $1,500. So I'm not saying that they not worth their salt. It depends on how big of a hole you dug yourself when the credit went bad. If you have a crater, it's going to take you a long time to get out of that. But if you have just a couple blips here and there, like I'm working on a mortgage for a young couple that's buying out in California. I pulled their credit and it had 2 late pays on their mortgage in December and January of just recently. And when I called them, they're like, there is no way. There is no way it's on auto pay. I can got my, so we actually got that corrected and their credit scores jumped like 93 points, because it was just errors on the credit report. So these are just a few things that people can do to do that. So when it comes down to will it boost your credit scores 100 points in 30 days? It depends on how big a hole you dug. You know, if there could be little tweaks you could do that just really jack things up. And the nice thing about a lot of the tools that you can use in today's market, they have, and I wish this was around forever, they have a thing called I call it the what if simulator. So you can put it in this way. You can say, you can pull your credit and the credit report came up and you have a 610. You need a 620 to qualify. So in the system, you can say, what can I do to get a 620 credit score? And it'll run through your data and say, well, if you paid your Discover down to $400 and you paid, a car payment, you're right there. You'll get 15 points bumps on your report and you'll be good to go. So we take that, we give it to the borrowers and say, here, do this as soon as you can, get me the data back and I can get their credit updated kind of instantaneously. So there's a lot of tricks of the trade you could do, but most people don't know.
Yeah, this is awesome stuff.
Thanks.
What I want to do with you, Dan, now is let's play with some live fire. I am going to open my vest a little bit and share with everybody a little bit of what's going on in my personal situation, and then I would love for you to give me your thoughts on things that I should be doing and should be aware of. You game?
Got it. Yeah. Don't daydream.
All right, so that's advice numero uno. So I'm in the midst of this major home renovation in our primary residence. We bought the house knowing it was going to need some work, but now we're doing more work than I think either my wife or I anticipated, which is the classic story of the home renovation. So I've got a HELOC that available to me that will basically cover the entire cost of the renovation. And that HELOC is at 9%. So when I started doing some research, I was like, how am I going to pay for this remodel? And what I saw is there are a bunch of credit cards that were offering 0% interest for like 12 to 18 months. And so I asked my contractor, and I said, hey, do you guys take credit card payments? And they said, we sure do. We charge a fee. I think it's like 3%. 3% fee for that. But absolutely. And I said, great. I went and opened as many of those 0% interest credit cards as I could and got as big a line as I could. And it's going to cover 80%, I would say, of the renovation cost. So I'm now carrying a balance of basically the maximum line for these credit cards. The minimum payment is 1% of the balance every single month, which I'm set up for auto pay. And so I was chatting with a friend and I was like, how does this go sideways? How do I get myself in trouble here? And they said, well, if you miss a payment, now you're going to kill your 0% interest. You're going to have to automatically pull on that HELOC and start paying the credit card off. But my thought is I'm set up on auto pay. I've got 12 months of of 0% interest financing from a credit card. And at the end of that 12-month runway, I'm just going to pull on the HELOC and pay off whatever the credit card balance is down to zero. And then I'll have that loan at 9%. Obviously, it's variable because it's a HELOC. But I'm curious to know from a credit perspective, where did I miss here? Where did I go wrong? And how can I do better?
Actually, that's a brilliant idea. Here's what I'm gonna warn you against. So just a couple of things. But I tell people that a lot of times. I'm like, go to Menards, go to Lowe's, whatever. You might be able to get 12, 24, 36 months, 0% financing. So buy all your shit there and then pay your contractor whatever you can and get the work done there. Here's what to watch for with that. The one, your line of credit, the rate actually is really good because Prime's at 8.5 right now. So normally it's like Prime plus, 2, 3, 4 points. So I was expecting you to say like 12, 13%. That's why I'm like, oh man. But what you did was awesome. So here's what to watch for. Don't miss a payment because like your friend said, however, if you go 366 days without paying that account off, the interest is going to accrue all the way back to the day you took out the first a bit of money. I hope you know that. You understand what I'm saying?
Say that again. No,
so
say that again.
0% interest, but let's say it's 0% interest for a year. Okay.
Right.
So let's say it goes a year and 1 day and you didn't pay off those accounts. Your interest is now going to be accrued back to day one and it'll all be uploaded. So do not go past Don't go past a
0%
year because
rate.
you're going to end up paying
Yep.
all that interest anyways. A lot of people
Okay.
don't know that. So be careful of
great
that.
to know.
So on like a month 11, that's when you want to pay off all those accounts with your home equity loan. But brilliant idea.
Okay.
I would,
Thank you.
nothing wrong with that. And you're also going to, hopefully you have some perks with those accounts where
I get cash back.
Yeah,
Yeah.
so use it. Brilliant idea. So that's, a lot of people, I tell a lot of people, it's like, go out and get, you need $5,000 to fix the thing. And, or people call me and say, should I get a 203K loan? I'm like, you know how much of a pain in the ass a 203K loan? The interest rate's about 75 basis points higher. Your fees are going to be higher. How much money you need? $5,000. Just put on a credit card. Go get a brand new credit card. And that's exactly what I tell people to do. And some people think I'm nuts, and that's how I know, don't go a year plus 1 day because you're going to get nailed. Don't miss a payment because you're going to get nailed. They're wanting you to kind of screw up or just, you just start paying and you just like any other credit cards, like, I'll just keep making, your car payment's probably on auto pay. So they just want everything on auto pay. So you forget about it and then they get you. So, but no, the way you structured it would be, it's perfect.
Okay, fantastic. Well, I'm super glad to hear that, and also relieved because I'm going to be learning about how I screwed up with all of our audience listening live. But I'm curious.
You're going to have some people saying you're an idiot. You shouldn't have put it on there.
Right.
There might be another prudent way to do it, but which you did. There's nothing. You paid an extra 3% to your builder, but you probably got 2, 3, 4% back in cash credit. So it's a wash. Yeah,
it's a wash.
No, I get it. I get it. I would do the same thing.
Okay, that's great. Now, I have noticed my credits. It's funny. We were talking about credit score and how people are getting their credit score. I use Capital One as my credit card company, and they've got a Credit Wise app, and it gives you your score. And I've noticed that's been falling. And I'm guessing it's because I'm carrying this balance, right? This massive balance.
The biggest thing there is your utilization percentage. Okay, so here's an easy way to pick up some points too. I won't say easy because you need money. Okay. So where you want to be, the maximum amount you're going to be able to increase your credit scores. It's weird because if you pay off every debt you have and have zero, you owe nothing to anybody, your credit scores are going to suffer. They want some credit moving and so forth. So you always want to keep things at like 30% or less of what your available credit was. Like you said, I maxed out these credit cards. So when you applied, you might have been asking for 20, 30,000 credit cards. They might have come back with 10 or whatever. So whatever it came back as, you want to try to keep it below 30%. So where you're going to get clobbered, and here's the benefit of this is you don't give a shit because you already have the home equity loan. So if you needed to get a home equity loan, all the putting in all this stuff on a credit card is really going to hurt you. Your credit scores are going to get hammered. But you don't care because you already have plan B, I don't want to say
the exit strategy
2 in place. So it doesn't really matter. So I would do it exactly that way. But once you start moving that money from your home equity loan down and paying those accounts off, hopefully you don't exhaust your home equity percentage because again, it's going to be 30% of that. You'll probably be a little bit higher than that, but all your credit cards will be gone. So once you get to the point where you use the home equity to pay down the credit cards, your credit scores are going to go back up, but it'll be offset a little bit by your home equity loan, but it shouldn't be that detrimental. Let me give one more piece of the puzzle just so people, because every person we talk, I won't say every person, 99% of the people we talk to, the first thing they want to do is, do you pull hard credit pull? I don't want a hard credit pull. I don't want to have to start my credit score system all over again. Your credit, we've talked to all the agencies, and your credit by us pulling or anybody pulling a hard credit pull on you should be a maximum hit against your credit scores of 5 points. So I have people calling me all the time, Dan, you pulled my credits and my credit scores went down 30 points. I had one lady so ticked off at me, I actually got her on a conference call with my credit company, and we broke down. I mean, she was adamant. She was ticked off. She was ready to file suit against me and everything. So we break it all down, and they're like, ma'am, did you charge, this was in like January, did you charge, your Discover bill went from like $1,300 to like $6,000, and so did your American Express. Oh yeah, I went to Hawaii. I took my family for Christmas. Well,
Oops.
that's where the scores came, the score drop came from. So she was so adamant that it was me that caused it. And I'm like, it's not me. So I had to prove to her that it wasn't me. So if you're out there trying to get a mortgage, it's just part of the equation. They're going to have to pull your credit scores. An analogy I have, and I have a lot of analogies, is this. If you come to me and said, Dan, my car won't start, but you can't look under the hood and you can't check the gas tank. Like, well, is the engine in there and do you have gas? I don't know. Well, let's figure that out first. So hopefully that makes sense to you. We have to see all your information before we know if we can help you or not.
Yeah, that makes sense.
Okay. So I don't know if I lost you there for a second. Yeah.
No, I'm with you.
Cool.
But getting back to my question selfishly for just a minute. So when you as a mortgage lender are looking at my available credit, is the HELOC that I have available and the credit card line that I have available seen as equal, or are those things treated differently in your eyes?
I honestly don't know how the algorithms work. In our eyes, we just look at the scores. All we really care about, what's your score and then what's your debt ratio. We don't go through and blend it all and figure out what's what. My assumption was you have a bigger line of credit than you need to pay off your credit cards. So your utilization might be lower. It might not be. So it might kind of be a wash of you moving, 30,000 of credit cards over to a $30,000 home equity loan. It might just be a complete wash, but it'll eventually, but you have 5 cards with one account. So it should work in your favor.
Okay. That's great. Well, yeah, I'm excited. I'm not excited to pay the 9% on the interest. I'm excited at the 0%, but I'm excited to get my credit score back up. Yeah. And then as people are making some of these changes that you've talked about, what's the delay time? What's the lead lag measure of okay, now I paid off the credit cards with the HELOC. How long should I wait, or how long could I expect to wait before I see an impact or a change on the credit report? Good call.
It's usually you're going to have to wait a cycle or two. And what I mean by cycles, you're going to have to wait the billing date. So let's say, for example, it's just going to be based on the billing date. Let's say Discover Cards, they issue statements on the 1st, and American Express might be on the 8th, and things like that. So it depend on what dates these things hit. But that's the best advice I've got on that one.
Okay, that's great. And then, so in a similar fashion, I'm going to be paying off these credit cards with the line of credit that I have. And that was all part of my master plan. Yeah. But for people that maybe don't have a HELOC or a plan B and are looking to offload some of their higher interest debt via a cash out refinance or via some other loan vehicle, what do you recommend people do? Because my lender was like, Michael, we can just pay off the credit cards directly. You don't have to worry about the HELOC. But if I need to get my credit score up, let's say I have a 600 credit score, and my credit score would be increased if I paid off the debt, but I don't have the cash or the line of credit to pay off the debt, what do I do? Shaking your head. Shouldn't have been there in the first place.
That's the dilemma. I mean, we have people, honestly, to qualify for a conventional loan, you need a 620 credit score. Okay. If you have a 619, you ain't getting a loan. And there's times where we can't get somebody a point. So we end up having to go with a different mortgage product because we can't pick up a point. It's crazy. I don't like the scoring system, but there's a need and a use for it. But yeah, the scoring system has its flaws, and even the repository, the credit companies, they won't tell you all their algorithms in the background. Like I've had conversations with their programmers and stuff, and they won't tell you everything. They basically will just, they won't tell you the back end so you can kind of manipulate it and figure loopholes around it. And a lot of them, one program will do this, one program will do this. So they might not even know all within the same thing as, how to manipulate the credit scores. But it's tough. It's really tough. And if you have
don't be in that situation.
Yeah. If you have a brand new collection hit, it's brutal. It can be brutal. So there's a whole bunch of different techniques to use. Like one of the things, keep going with your questions. I had a good video out one time about, should you pay off collections or not? And that's another topic that a lot of people don't understand as well.
Okay. Yeah, we can circle back to that. I guess one of my last questions for you, Dan, is we know we've talked about a bunch of the things that we can do in the positive, in the affirmative, that'll help us. What is like the one thing that you tell people to avoid at all costs that would just absolutely decimate your credit score? Is there one like red pill or one thing to really avoid, make sure at all costs you're avoiding?
Obviously, late pays. Let me explain what a late pay is, though, okay? Because a lot of people think, okay, I got my credit card statement, I got to pay it by the 15th. If I don't, I'm late. Or your mortgage. I mean, I paid I've had customers, during a consultation will be like, okay, you have a mortgage, yeah. Any late pays? I've had people say, yeah, I paid last year, I probably had 4 or 5 late payments. I'm like, oh boy, how, and then I got used to asking this question, well, how late were they? Each month they were paid in the month, but one was on the 18th, one was on the 20th, and one, I was waiting for a bonus check, so I didn't pay it till the 30th. And I'm like, you're good. So how credit works is, if you ever looked at a credit report, it says, gives you your ratings, and then it'll say 30, 60, and 90. And those are late pays. So once you go over 30 days late, you're 30 days late. So meaning, if you have a mortgage, and all mortgages are due basically on the 1st of the month. If you pay on the 30th of each month, and I know all months don't have 30, but if you paid on the 30th of each month, you're considered paid on time. You've never missed a payment and never been late. Same thing with credit cards. You can pay on the last day of that cycle and you're not late. You have to go 30 plus days late before you're really late on credit. And a lot of people don't understand that as well.
Okay.
So
that's great.
Don't try your hardest to make those payments, even if it's on the 30th, even if you have to wire the money there or do a transfer or something like that, to avoid going to the 30-day late, because then that's detrimental. It doesn't matter if it's a credit card, a car loan, or a mortgage, it's going to impact your credit.
Okay. Great to know. My last question for you, Dan, before we get out of here is I want to hear from you about credit management over the long term. And so I know you said if someone's just getting started, maybe get a co-signer or be a co-applicant on someone's credit card so you can use their credit history. What are things that you see really successful people doing for long-term credit management?
Honestly, a lot of people use systems that I'm talking about. And I use 2 different systems. My kids use basically the same systems I use. I have friends that are accountants and things like that. They all use something. But it's the something that you use is the most important thing. Like there's systems out there that are called Credit Sesame, Credit Karma, all this other stuff. Great systems. I even have it on the website I created. And it's like, if you want a free tool, these are great free tools. Don't buy anything else from them. Don't do an upgrade. Don't do this. Don't do this. Here's what I use a system called IDIQ. And the reason why I use it is this, and I do use it. It gives me my FICO credit score. That's the biggest piece of that puzzle that I need, so I know where I'm managing this. It has the what if simulator in there for me. It tells me, when I should make payments. It shows me everything that I have outstanding. Like I might, see on there one of my balances went up, and I might call my wife and say, "What happened?" "Oh, we just bought airline tickets for the thing." "Oh, I forgot we were going there." So I monitor it there. And then if you need any assistance, like let's say everybody wants to dispute something or do this, you can do it right in the system yourself. So it's managed right through that system. And that's how you monitor. And you can see, and it has the biggest thing, like I said, it has the what if simulator. Like in your case, you can say, oh, well, I have all these credit cards now. Wonder if I paid all those off with my home equity loan. So now my home equity loan balance went to here and these went to this. What would it do? And you'd see right on the screen what it would do for you.
I got to go check that out immediately.
And it's like $20 a month or something like that. You're going to pay a credit counselor $200 to $300 a month. So basically this is a whole year for what you'd pay 1 month in a. Now, again, it goes back to how deep is that crater you created in your credit? You might have collections, judgments, things like that. It's just, you dug too big a hole and it ain't going to help. So now you need a professional, somebody to kind of work you through all the legality things of things.
Okay.
So that would be that part. But
okay, that's IDIQ.com. That was the site you use?
Yeah.
All right, we'll link to that in the show notes.
Cool.
Dan, this was awesome, man. Thank you so much. If people want to hear more from you, what's the best way for them to reach out and get in touch?
Honestly, the best way you can just Google me. My name is Dan Frio, DANFRIO. You'll find everything about me. You'll find my website. You'll find my Twitter. You'll find my Facebook. You'll find everything you need to track me down. So I'd love to help.
Sweet.
The cool thing is, and I'll just do a little self promo. I work at a company that's a federal bank. So I'm federally licensed. So I'm licensed in all states, all 50 states, as well as Puerto Rico. And one of the cool things about it is a federal bank, but we're also a mortgage broker. And that's very uncommon in this industry. So we're set up with about 50 different lenders right now. So our goal here is, and why I'm here, is I can help anybody throughout the whole country. And that's our goal.
Awesome. Well, definitely, if those listening need mortgage assistance, reach out to Dan. He knows his stuff. Dude, great seeing you as always. We'll catch up soon, I'm sure.
All righty. Take it easy, dude. Bye-bye.
All right, everyone. That was our show. A big thank you to Dan for coming on. Super insightful. I learned a ton of stuff, and I'm also thrilled to hear that I didn't just totally screw myself by getting these 0% interest credit cards to finance my renovation. As always, we'd love to hear from you. Ratings and reviews, comments are really helpful. We look forward to seeing you on the next one. Happy investing.